Welcome and hello to Real Estate Chat. Robert Eade here on the 26th of March with Ron Hauth, the veteran who's going to tell us about 1990 and how that can maybe tell us something about what's happening right now. So we'll start share a screen here if we can. And of course, now we've got a little mix up because of what we just finished doing. Okay, my goodness. If we don't have a false start with this darn thing, then it just won't be right.
Huh,
Do you
something's
see something
happened.
there, Ron? Okay, here we go.
Robert Eade has started screen sharing. There you are.
There we go. Okay, so um, the spring that never sprung, part two. You remember that movie, of course. And what we have here is Ron's chart from 1972 through to the present moment. And the reason for showing it is because it's the only one they have that goes back to show this little mountain. Now, that was a gigantic mountain at the time where we got to like 289,000 a couple of times in the course of the year. And then it fell away and it took like 23 years to get back to the same point again. Now, we're hoping that there's enough things that are different about the world and different about Toronto and different about everything that it won't be another 23 years and we won't be repeating this exactly, but I'm going to say that this is the non-boom spring, and the answers that we may be able to present to people today is what should they do? What can they do? What might they do? What could they consider doing in a non-boom spring? And I've used uh, this, which I've used before, saying categories, there's five, and then really added another two types of clients. And there's three potential scenarios to look at into the near future. Now, the near future is 60 days. We're calling it more like 10 months to take us to all the way through this year. But the first time buyer is what everybody is talking about. What are they going to do? First time buyer sitting on the sidelines. Mr. Sabrizzi this morning had a very nice segment on the first time buyer and feeling not compelled to do anything because why would they if they think that interest rates are going to come down and they think that prices are going to come down? Why should they do anything? So the answer to number one, first time buyer is buy when everyone is selling. That's what everybody wants to do. You should be in no rush to buy. You should be looking intently, but have no rush to buy. The last time seller who's got nothing to buy is the second category, and there's two of those. People that have been in their house for quite some time. A, they bought it before 2003, and B, they bought it after 2015 or 2019. So it's either a simple story or a complicated story. If you're a last time seller, you must decide first up why you're selling and where you're going. If you don't know where you're going, then don't go anywhere. Number two, do that, which I've numbered three here. Do the tough thing first. If you're going to buy and you're going to sell, what's the first thing? What's the tough thing? Selling your current place, finding the next one. But enjoy your good fortune because if you bought before 2003, you got tons of equity. Market's gone up tons since then. And if you bought after 2015 or 2019, try and find something that is exactly a prototype. You're not going to buy it, but just to use it as an example of where you would go. And if you did have that one, you'd bought it yesterday, what kind of shape would you be in to achieve that? Now you bought it, now you got to sell yours in a hurry. What exactly will the transition be? You sell and now you buy. Have you just traded owning and mortgage for renting? What have you done? Now, if you're a buy-sell customer who's trading up or trading down, it's the same as the couple above. Decide what you're doing and examine exactly where you will be after the fact before you start. And then we've got two types of investor clients who one will be underwater if they sold. So maybe it's worth it to sell, maybe it's not. Examine your situation 3 months from now, from today, into the best, worst, and most probable scenarios that we're going to outline next. And then there's an investor who would be in the money if they sold today. Maybe they bought it 10 years ago. So we say that the opposite of the first one, sell when everyone is buying. Refinancing. may be your opportune option. Now, in my view, which we revised yesterday, today we've got current rates somewhere hovering around 4%, just under, just over. The recent market peak was in February of 22 at 1.3 and change million. 905 peaked a little bit, right on that, and 416 peaked a little bit after that. So we got ABC seller scenario. Seller's best case, where prices stabilize at 82.5% of peak, which is just about where we are now. And rates, because we know they're going to go down, drop another half a point or so. C is the buyer's best case, buyers wanting to buy at a lower price, so prices drop 20% from right now. Wouldn't that be amazing? 800,000 is the average price. But rates, if they got down to this low rate, would mean that something calamitous has happened that would prompt the Federal Reserve in the United States and the Bank of Canada here to drop rates precipitously. And bad things are the things that cause that to happen. So somewhere in the mushy middle, prices stabilize at 72.5% of peak, which is about 10% off where we are now. And the 5-year rates are probably going to be 3.5. So they're going to drop not quite a point. Now, why do we talk in these terms? Because we use Ron's graph at the beginning to show the 1990 through 96 market, where it took a long time to recover from a peak. But it's too hard to see because when we have a scale of 1.3 million, something at 300,000 doesn't show very much. But we got this idea to use common peaks zeroed out at 100 from Robert Hauth of Royal Bank. And he used quarterly data and Canadian data and all kinds of stuff and only did it for a few months and didn't continue because he doesn't have good data. Fortunately, we have good data because we can put all of the Toronto numbers together, put them at 100. And so we've been watching this red line go up and down. I guess I can mark it, go up and down, following in this channel, which we've also said you can't do, but it's following pretty closely this green with orange dots, 1989, which bottomed out at around 70% and right now is around 82, 83%. So that's why we use this, because there's so many parallels to right now. I tried to find out, because if we go to prices in a couple of them, okay, that what dawned on me is we finally had prices drop down below the prior year, and that it happened before in 2017, a little more dramatically. So I tried to find it by just looking at the months, and this is 2016, 2017, 2018, 2019, 2020, and the months of March and where it went, and then it took off like crazy to the peak. Now, this is the same graph because the prices had just gone up, and so we have February 22, January of 2015. No one knows what the prices are exactly going to do. So long story short, there's only 5 types of customers, 5.5 types of customers, and there's only 3 possible scenarios. Prices stay where they are. Prices drop another 10%. Prices drop 20%. There's no other choices, and there's no other types of customers. That's my opinion, but I believe it's true. We will hear from the Toronto Real Estate Board next week that we've had the lousiest, again, March ever, the 30th best of the last 30. Somewhere around, this is 4,400 sales. This morning it got up to, always Tuesday, Wednesday is the best, 4,600, but it still won't change how much we were inferior to the next lowest one. So this one shows us that's what I call the school year. We start in September, and this really shows the winter doldrums. And we just got nowhere out of this. No, the spring that didn't happen. Here we are again in the regular January to December. But what it tells us here, here's the 4,400, 30th best. 33% off last year. 54% off the 5-year, 53% off the 10-year, 50 point something are off the 17-year, 50 point something are off the 20-year. So this is where we are. We're half where we should be because everybody is doing nothing. If you're doing nothing, then there's no movement up for sure. Now, fortunately, people are not bailing on the money. I predict that in the best case scenario, we're going to see prices go up 0.66, not a percent, 2/3 of a percent, making it the 5th highest March ever, but still less than where we were. And the worst case scenario, where we're down 1%, is it's still the 5th highest month that we've ever seen. So prices are not falling. If this is the summary that we see next week from Treb, where the average price is almost 1.1, 1.82. Now, inventory is up, almost hitting record levels. 24,000 came through this morning. We've got inflation that doesn't seem to be as bad recently, but it's still not good. And I'm going to say that we're going to see 4,500 sales, new listings in the same range of 12,000, relists, meaning it's the same property, it's the same owner, it's the same agent within the original listing period. 25% of the listings that came out as new, reported by the board, are actually relists. So the net number of new listings, even though this is the time of year when everybody gets a new car, gets a new house, gets a new everything, we're only 9,000. We have 24,000 at month's end. The average price, here we go, listing days on the market creeping up a bit. The months of inventory, 5.5 months. The sales to new listing ratio, if we use their numbers, it's 36.6%, a true buyer's market. If the break-even point on buyers to balance is somewhere around 42. Sales to net new listings is 48, which says it's a balanced market. This is the chart that we had on relists, subtracting from new listings from last month, because I'm not going to do it all again twice in a couple of days, because the actual numbers, we have to use the actual numbers that come out from Treb. So what we have, in my opinion, is a spring that didn't come. Something's going to be very similar to what we saw in the spring of 1990, where you've got an awful lot of people who are in the business, have a license, that have never seen it happen before. They've never seen no spring. It always was the way it was before. This time, it's not. Now, that's a lot of me talking. I wonder whether you did it. I talk so much that your audio went off, Ronnie, or are you still okay?
No, no, I'm still here. Yeah.
Okay. So that was, again, an awful lot of me talking. Let's get some of you talking.
Yeah. Well, if you notice on my graph,
Yep.
we have, and I thought I was pretty clever back in the 80s and into the 90s. I noticed the peak in 1974, which you can see, or 74, 75.
Oh, yes. Here we go. Yeah.
Yeah, and there was a similar peak in 82.
There you go.
And then another one, 88. So 88, 89. Those I was clever, I thought, anyways, observing that the peak seemed to come every 7 years. There'd be like a reset.
Uh-huh.
Of course, then as soon as I decided that, the whole thing changed, and the next peak didn't come for a long time after that.
What if we do some
Dropped for a
imagining and
long
pick
time.
those peaks that you're talking about and go
Yeah,
like this? We sort of see it does do the same thing again and again and again.
yeah,
Maybe
it's a
not 7 years,
similar.
but it does it. It's a similar pattern.
It's a similar pattern, more extreme though, I guess. Access to information is so much faster, and the market's more liquid, with more agents,
Well,
more buyers, more sellers, easier
uh,
access to
oh
money,
yeah,
et cetera.
computers and
Yeah,
everything. And also we had you could get a first mortgage variable for less than 1%. So
right.
that's sure
So
puts some
yeah,
pressure on the
but
prices up.
the peaks back in 74, 75, and 82-ish are similar in shape, and 89 are similar in shape to the one that we're going through now. So I don't know
A
whether,
blip and a carry on and a blip and a carry on and a whoosh.
yeah. So, but if you zoom in really close on them, they look exactly the same as what we're looking at now. So, and then 89, we plateaued for a while.
Mhm.
The market went up and down. It looks flat enough to
Yeah,
be
I
a
wish I could
plateau.
blow that up. You're right.
Yeah. And then started to drop off, I guess, when people lost confidence, or don't recall if interest rates went up then. I have some of the interest rates on a monthly basis, but not all of them going back that far. to be able to tell. But
Yeah, well, that was one of the times when they raised up interest rates like crazy to try and fight inflation.
yeah,
And we saw like 18, people telling stories of renewing their first mortgage at 18%. And
right.
nobody was buying at that time. And
Yeah,
so mission accomplished for raising the rates
that's right. They did go.
to
And in
stifle the boom.
80, 81, 82, 80, around then they raised, that's when the rates went to 21%. People were buying faster and faster at higher and higher prices. Um, so they beat the interest rate increases.
Yeah.
So that was the cause of that one. Um, but yeah, we are seeing similar patterns. This one just stretched out longer. And we saw some real extreme peaks. That was the 80s. Oh, where was that? 17 and 21, 22. Um, I don't recall what excited the activity then. Um, and the way it looks now, I wonder if we're in this kind of plateau thing that we had back in the early 90s, or whether it's just taking a breather and going to continue on. Lots of reasons to be confident in the market.
Well, the market or the chart that I had takes this market peak and puts it the same place as that peak there. That's what
Right.
this one does. Puts it all right there. And so
Ah,
the green with orange dots, even though there's five other markets in there, trickles down. And the point of this one is that in all these other ones, prior peak in July of 81, October of 89, spring of 08, April of 17, February of 22, in three of those four times, the market had returned to 90% within 24 months. So we're past that. We're at 3 years. And so the only one that's left as a comparison and still dribbling along is this the years following 1989 October. So we don't want to say that the market is bad and terrible, but of the three things I believe that we've said, the market's either going to prices are either going to stay where they are. No one will sell it for less than that. Prices will fade a little bit, or prices will really go down another 20%, which is a lot. It's like 40% from where we were at the very top. We've never seen that happen. But so
right.
that's why I put that as the worst case scenario.
So, well, that brings me back to thinking that real estate being a long-term investment, it's time. I heard it said that it's time in the market rather than timing the market. So timing the market a little bit, that might benefit you a little bit, spring or fall or spring and summer difference. But having something that you own and long term over a 5, 10, 20-year period is where it's going to make the difference. And I noticed prices are not in not falling precipitously. They're relatively stable by the looks of it. So, and
That's
I've
right.
all
If we look at prices and this whole thing with time in the market, if you own a property, you
yes,
are enjoying it. The reasons that
right,
you bought it, the backyard, the parking, the proximity to your work, the distance from any other neighbor, the school that your kids go to, all of those reasons you're enjoying, plus as you pay off the mortgage, you're retiring the debt principal. It's not fast, but you're doing it.
yeah,
You're consuming it by living there. You've got to live somewhere else. Instead of paying $5 grand a month to live somewhere else, you're paying $5 grand a month to live there, and you picked it. You enjoy
yes,
it for the reasons that you originally picked it, and your price is staying relatively stable.
right. Even
Flat
though
is the new up.
they're not climbing dramatically necessarily, but you are if you
Not
own a
dying.
property, you're paying down the mortgage and you're gaining a little bit every month and faster and faster. And so the time in the market, not timing the market. And I've also observed that having been through quite a few of these things, you've been in it longer than I have. I got my license in 1980. Um, and seen ups and downs a few times.
Yeah,
It's easier to buy in a down market. It's easier to buy up in a down market as well, or in a market like this, because we're
absolutely,
not
absolutely.
subject to competing offers. Lenders will probably be a little negotiable on rates too. You could probably get something cheaper than posted rates
Very
because
good point.
they
Very
want to
good point.
lend money out too. So there's
Absolutely.
opportunities to save there.
Yeah. If you're good and your deal is good, they want to give
Excuse
you a
me.
loan.
Yeah. So lots of opportunities to buy and benefit by owning a house. I think it's a benefit by not having to compete for houses. People paid huge prices in order to win, but did they really win? Because if you look at some of these short-term peaks, they bought and then prices shot up. They bought at the peak, the prices dropped. If they had to move in the next little while, they would be down. And now it depends on why they were buying and selling. If you buy and sell in the same market, prices go up and down proportionally everywhere. So if you bought at the peak and prices dropped, um, you'll be able to sell for less, but you'll also be able to buy for less than you would have bought at that same peak. So things are proportionally up or down at the same time as long as you're acting within the same market.
That's right. Well, that takes me back to you got to figure out which one of these customers you are
Right.
and then do a good analysis of the situation based on the realm of possibilities. Not everything in the world is going to happen. One of these is going to happen. And decide what's good for you. If doing nothing is good for you, well, then do nothing. If doing something is good for you, then I'm sure you know somebody in the real estate business. And if you don't, you can find Ron, you can find me, and we can help you out. So without being complete sycophants to the real estate business and feathering our own nest and telling everybody everything is okay when we're scared to death, um, I think this is the truth that we've just said. And you can look at it a bad way, you can look at it a good way. Nothing's going to happen until the election's over, number one. Who knows what's going to happen during that? Nobody knows what's going to happen. And nobody's going to know what's going to happen with this trade tariff and all this stuff, 4 o'clock, and it changes every day. It drives me crazy. But um, everybody's got to live somewhere. You got to live somewhere. And so you decide whether you're already there or if there's a change that you can make that will improve your life. And if so, that's what you do.
Right. And there are
So,
people that will put their house on the market to sell, but only if they can get a certain price. And people that really have to sell or want to sell and move will be prepared to negotiate the price in order to get that done, to get that accomplished.
true
So
enough.
there will be good deals out there and people who sit on the market without being flexible and without really wanting to or needing to move, just hoping somebody will come along and overpay for it. So,
So get out there, have a good look around, find the things that are close to what you want, go and look at them, make an offer. If the fella won't take it, the lady won't take it, try it again.
there will be others, yeah. Yeah. So yeah, there are lots of opportunities. It's and again, I think I said this last time. I just say the market's always good. It's just good for different people at different times.
Well,
It's
it's a trite thing, but it's very, very true. Very, very
yes.
true.
So right now it's not good for speculators, but it's good for buyers and sellers
That's
who
right.
are buying and selling because they want to and need to, and they can do it calmly without competing and overpaying and making decisions without they're not making decisions without proper thought and consideration. So it's a lot less stressful. So
Well, I think that's a good summary, and I think that's a good place to cut it off so that people don't have to wonder if we're ever going to shut up.
yeah,
Okay.
you shouldn't have let me start. Yeah.
Well, no, that's exactly why we're sitting on here, two old farts that are talking about things that happened before, and some people who happen to have their license never experienced it before.
There's
So,
not, and people who haven't had their licenses for very long haven't experienced this before. So we've seen, well, you got your license when? You started when? 70s?
74, 74. It seems like a million years ago, but it's almost as, what's the difference between
Well,
74?
I'm a novice in comparison. I got my license uh, in 1980. So 45 years ago this month, March
Well,
1980.
yeah,
Wow. That's all I
don't
know
let
how to
anybody
do.
know. Don't let anybody know. Tell them that's your natural hair color.
I know we hardly look this age. I'm prematurely distinguished.
I see.
That's what it is. All right.
Okay. Well, I'm going to wind it up this time, Ron, even though I threatened to a few minutes ago.
Oh yeah. Okay. All right.
All
I'll
right.
shut up.
Talk to you after the board statistics come in.
Okay. Hasta la vista, Bobby.
Okay. See you later, Ronnie.
Bye.